Let's see. All right, I am ready if you are. Let me just make sure that I have all the right screens. Cherry Blossom, welcome back. Good morning. Okay. Present, ready for class. Bob is here. Okay, we can start. Welcome to Tradespoon in Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options using our technology. Again, for those of you new, if you're watching the recording, I think the main difference between our services and other services is that we have a team of financial engineers. We believe in neural networks that you can find patterns in the market. Obviously, there is always element of uncertainty, but with all the advances in AI, you can find valid signals. And then not only do we provide these signals, but actually trade them in the live trading room. And I've been doing that for over 20 years. Disclosures are very important, so please read them. If you're new to trading stock or options, obviously there is always risk. There's patterns in the market, but then there is always uncertainty, right? And you always have these black swan events. So you have to be ready for them, and you have to understand the risk associated with them. So if you're new to trading, I encourage you to visit optionsclearing.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm here to show you what I do in my own account based on my own risk tolerance level for general education information purposes only. It should not be assumed that the future trade picks will be profitable or will equal past performance. Okay. Now that the disclosures are out of the way, trading plan, right? Very important. I encourage everybody to write. I personally always write all my trades. I have actually a spreadsheet of all my trades, and actually, if I want things to be internalized, kind of engraved in my brain, then I write it down, right? And that's the only way to become a disciplined trader and internalize information. What do I write in my journal, in my spreadsheet? Every trade, I put it in a spreadsheet, and then I have a checklist, right? Before I trade, I always ask myself, how many positions do I have? I propose not to have more than 4 positions, especially if you're new to trading stock or options. And number 2, what is the maximum exposure or risk per position? I propose 2.5%. Right. So if you have $10,000, you never risk more than $250. Right. You look at the worst case scenario based on you hold position for months, you hold position for weeks or days or hours. Well, then you look at the worst case scenario on that time frame, and then you make a decision. And at the worst case scenario, if you did not lose, if your position was not down more than $250 and $10,000 portfolio, right? If it's $5,000 portfolio, it's $125. Then you give yourself A and B at the end of the trade. Once you close the trade, you give yourself A and B. If it was more than $250, then you give yourself C and D. I think this is the most common mistake we all make, including me. After 25 years of trading, I still make that mistake. But at least I have a checklist, and usually I'm pretty honest with myself. I grade myself, right? And if I see as soon as I see more than one C and D, then I start going back to kind of remind myself that I want to avoid C's and D's. So usually it means position size should decrease, right? Or I violated one of my checklists. What are the checklist? Liquidity, right? I like to trade stocks that have weekly options, tight bid and ask spread. That's another checklist. Maybe don't hold position in front of the, unemployment data tomorrow, or downsize your position, especially if you're doing short-term trading, right? You want to downsize or close your short-term position in front of the major events. And always translate strike price into notional value, right? One contract of NVIDIA is different than one contract of General Motors, right? So you have different exposure. So you always want to have similar exposure to different sectors, right? So if you're risking $250 on NVIDIA, you need to risk $250 on General Motors. It cannot be you're risking $1,000 on NVIDIA and $10 on Ford. That doesn't make sense. So that would be my proposal. In terms of how do you find this stop loss, right? To avoid prospect theory, right? Risk aversion. We all have that. We all make mistakes. Psychology is important. Some trading psychology is important, and the biggest pitfall, I think, is if I have to pick one, it's the economy. It's risk aversion, right? That we view gains and losses differently, right? $1,000 gain doesn't feel the same way as $1,000 loss, right? So, and to avoid that, you need to have a plan, and you need to write down your entry and exit strategy beforehand. Otherwise, you will experience this. Okay, so how do you determine stop levels? Unemployment data continues to be, I think, better than expected. We had ECB decision today. Not the decision, but ECB decision. They kind of kept rates the same, kind of pointing to potentially better economic conditions. Interest rates continue to drop, right? Interest rates continue to drop. That's bullish for the market. You have a pretty sharp pullback from 4.3 to 4.08 going into unemployment data tomorrow. If there's no surprise, I assume interest rates will continue to go higher. And the main development is gold, right? Everybody, right? That's what bulls and bears have to reconcile, right? There's some people who think that gold can go to infinity and equity market can go to infinity. But usually gold goes up because fear of inflation or fear of recession. So, QQQ is at all-time highs, SPDR is all-time highs, gold is at all-time highs. Everything is at all-time highs. Usually that doesn't last forever, right? It doesn't last. It could. These divergences obviously can last, longer than you can be solvent. But at least something at some point needs to be reconciled, right? Either gold is going to continue going higher, continue to make all-time highs, or gold will pull back and equity will take over. Meanwhile, QQQ is up. Let's do SPDRs. Let's do QQQ both. So QQQ trying to close the gap, right? It's at yesterday's session high. It did pull back toward the close. So this is your first overhead resistance, right? We need to clear this level. That's yesterday's high. We're right at that level, and then closing the gap and all-time high. So resistance number 1, resistance number 2, and then you have support number. Well, probably both. If you're day trading, I would use. Let's say you say, okay, we're going to all-time highs after unemployment data tomorrow. Great. What's your stop level? If you're doing short-term trading, about 5 points on $250, that's 50 shares. If you're doing longer-term trading, you're going to hold it maybe till Monday, or you use maybe 10 points. So 5 points if you're not going to hold position through the unemployment data, and 10 points if you are, right? And then we might revisit the highs, we might make new highs, but that would be the thought process, and that's what I would write down in the journal before you make a decision. Welcome. Progressive, EMR, BSX. All right, so we can add these to the watch list and see if the model doesn't know what's going to happen tomorrow with the unemployment data. So this would be model makes a prediction for two trade. EMR, BSX, NVIDIA, Progress. Or try to be flat by the end of the day. In terms of earnings, Kroger is up 3%, Sienna is down 13%, AO is up 13%, and ExxonMobil, oh no, that's it. So these are the, Marvel, I think after close today, earnings. So today I'm watching AO, CN, and Kroger. But if you look at the strike price where it's been trading, so you can see a pretty large negative VANA. I mean, not huge. I mean, only 260, but still, that's where a relatively large open interest at 26, and positive news, and accidentally it's at 26.30, exactly where. So it's probably going to gravitate at up down. You do have earnings. All right, so let's watch. So I would usually wait 5 minutes to make a decision. Sienna, IO, Kroger. All right, let's watch. So your options did not start trade. Sienna. All right, any questions so far? Wow, good morning. Are you still trading EWJ? Yes, I still have EWJ. We'll go over that. Let's see, IO is up 7%, ExxonMobil is up, NVIDIA is up, General Electric. NVO is up 7%, so I think I'm so let's switch to 5 minutes. Okay, so I'm sold maybe 30% of my position in NVO, been trading around this position. So it reached 133 level, it's up today significantly. Wells Fargo is up, Nvidia is up. Let's see how Sienna doing. Sienna continues to pull back. Let's look at Sienna. Continues to deteriorate. So 836, I would wait. So we have one candlestick. So Sienna did basically the butterfly. So 50, 45, 40 butterfly, which now is profitable. AO also basically navigate, gravitating toward 26 strike. Right, so you have a large position at 26, so dealers and market and everyone else is kind of trying to mitigate the risk. Plus, you have a press conference, I think, starts in the next 20 minutes. All right, Sienna. Not very liquid, so that's the problem with, when you deal with non-liquid stocks. Or Sienna. Kroger continues to go higher. So the nice breakout in Kroger. If you're a long-term investor, you do want kind of these type of patterns, right? Where it consolidates for, is it months, years? Yeah, it consolidates basically for a couple of years, right? A couple of years unable to break through this overhead resistance. Now it's breaking above that level, and the stock continues to go higher. All right, let's see. It's 8:42. So BSX, Progressive, Qualcomm, and then NVIDIA. Qualcomm is doing a catch-up trade. I mean, stop level could be 160. I mean, if you're aggressive, 169. If you're more conservative, 168. So $3, so maybe 2%. So maybe 2% stop loss on Progressive. Oh, sorry, on Qualcomm. A little bit less volatile than NVIDIA. So Qualcomm buy. So if it drops to 168, which is 68 or 50 or 20, 25 shares, 25 shares. Right, so I got filled at 171.95, and I mean, I don't want to hold it till tomorrow because tomorrow could be volatile. So I'm going to try to close it today. So maybe 0.5%. Maybe try to catch $1, 173. So that would be Qualcomm at 173. So I trimmed NVO, and these are the trades from yesterday. Right, so I didn't do any trades since yesterday's morning. Right, let's review other positions. Let me just check my stuff. Sienna. Okay. Not the Biden state. Okay, thank you, Kevin. All right, so let's review other positions. Okay, so short signals are from aggressive power trader. You can find all the orders here. And then elite circles, same information, just an aggregate. Let's see. So EWJ, had a question on EWJ. Am I still in EWJ? Yes. So you do have a big gap, right? Continues to go higher. So I'm still long EWJ. In terms of overhead resistance, let's see if there's any, in terms of positioning, right? Right, so in April, right, this is, the blue line is April, pretty, I mean, significant 74, 77 call buying, right? It was the pretty large call skew. So at least as of right now, there is a lot of demand for the calls in EWJ, right? So people think it's just going to continue going higher. So as long as that's the case and it's above the uptrend, I would stay bullish on EWJ. I mean, obviously it's overbought, so I did trim the position, but maybe on pullbacks, I would accumulate. I mean, it's just gliding on a 50-day moving average. What is it called? Interest rates dropped. You would think that Verizon should rally, but for now, I mean, it is up 70 basis points, but it just can't get above this 41 level. Even though same thing, there is a pretty large demand for 42, 43 calls. It's a pretty large, significant call buying at 42, 43 level. But now it's in March, actually, March expiration. Is there more in April? April kind of hedged, right? So people are buying the calls and hedging or selling calls in April. Yeah. So that's Verizon. JD, I'm out. JWN, I'm out. And these are leftovers of earnings play. NVO, we talked about NVO. You know, large, it's a breakout, right? There was a large positioning at 125. There were news, right? Positive study, experimental obesity drug show greater weight loss in early data. Okay, great. So on that news, obviously that's the catalyst, right? That's the catalyst. So it's it basically now broke through that overhead resistance, and now 135 is the new, right? There was a pretty large position in 125, and then now a large position in 135. Yeah. So now the position, well, actually, we passed through all the positioning that were 125, 135. So now looks like, you know, it continues to go higher all the way to 145. So there is really no overhead resistance to 145. So next level is probably 145, if I have to guess, in NVO. Maybe I should add. Give me 1 second. NVO. Let's see, 130, 125, 10. So if you think it can get to that level based on the supply and demand of calls, and then there is no overhead resistance, then that may be a good trade. So that's NVO position. QQQ put spread. I think tomorrow is going to be a big event because, I mean, we already have initial claims. We had JOLTS data. So I assume it's going to be a solid data. Basically would wait for Tuesday and Wednesday, CPI and PPI data. We're either going to close the gap and make new highs, or we're going to revert down and drop to, 420, 425, right? So it's kind of binary outcome. You can see all these demands and calls, whether it was silver, gold, Germany, Nvidia. I mean, there's just a lot of enthusiasm. So, CPI and PPI data will probably determine the next move in the market. Right. On one hand, market is overbought and needs, probably should pull back at some point. But on the other hand, there's just a lot of momentum behind these stocks. So all eyes are on, well, tomorrow unemployment data, that would be first. I assume it's not going to be a big surprise, but CPI could be a surprise, right? That could be something that nobody expects. All right. So for now, holding QQQ put spread. It's actually not doing that bad. If you're not comfortable buying put spread, then I propose to buy SH, right? You can be long SH to hedge your portfolio. Marvel, yeah. So today, closing bell, let's do Marvel earnings. How's it doing? I assume it's up. Together was, yeah, it kind of continues to grind higher. Look at the Kroger. Yay. This guy's doing really good. All right, AO, I think it's starting the conference. So AO is going to move now, one way or another. AEO, yeah, 11. Oh, no, it's 1 more hour. 1 more hour. Okay, fine. So you're kind of waiting for the press conference, and CN is trading sideways. Okay, and Kroger is up 8%. Kroger is doing good. How much does the Kroger usually moves? 7 to 10%. 7 to 10%. It's already 8%. Okay. Intel 547 call at 169. Taking profits on NVO. Yeah, I mean, I did take profits on it. I mean, it depends on your position, right? I mean, if you had a large position, right? I mean, right now, the way I would look at this, I think it's very simple, right? Well, not very simple, but look at this NVO thing. It's just not, that's not right. What happened to me? So basically, I mean, it went through consolidation for a couple of weeks and broke out of the 125 level, right? That's where we had actually a lot of positioning. So I would say 125. If it drops to 125, which is $10, right? So what is it? 8%, 9%. You don't want to be down more than $250, right? So if you're going to be down more than $250, then you don't add. If you are going to, because at least from how people are positioned right now, there's really no overhead resistance until 145. So it could be at 145 between now and basically April, right? In the next 30 days, 145. But it's a volatile stock, so you want to be in a position where if it pulls back, you want to add more. Do you expect silver to catch up at all-time high? Let's look. So definitely gold, very similar setup. You have multi-decades basically overhead resistance, and now you have a decisive breakout. So gold is, continues to rally. Silver also continues to rally. It does have that overhead resistance. Let's zoom out. Yeah. Okay, sorry. So you do have basically and now it's facing this overhead resistance again, right? So in theory, silver broke out, gold broke out, silver highly correlated, and it should follow gold. It's been underperformer, and a lot of people think that it will continue to rally. Personally, let's look at the positions. Let's see how people are positioned now. Let's see what the crowd thinks, at least option crowd. April, March. So we're at 22. There is actually yellow is what, March 15. April, is there a positioning in May? No, small. So April. So a lot of people now, 20,000. We saw 80,000 right before the move. Now it's 20,000. So it's a lot less, but still pretty large concentration at the 24, 25 strike. So there is still, 20,000 contracts that think we can get to 24, 25. I mean, that's 24 is for the past 3 weeks. That's pretty bearish price pattern. So unless CPI comes in harder than expected, we're going to 3.8. I mean, if CPI comes in harder than expected, we're back to at least 435 or even 450. So, I don't know what the CPI data is going to look like. Predicting economics, I think it's completely very difficult, even for somebody who are economists. I follow some of the economists that I respect them and follow them for many years, but half the time they're right, half of the time they're not. So I don't know. In theory, inflation should continue going lower, right? So assuming that January is an anomaly and CPI comes in, better than expected, then yield will drop and silver and gold will rally. Marvel, Broadcom earnings, Earnings has been so volatile. Honestly, I don't think I've ever seen more volatile earnings than this year. So my inclination is not selling the premium. My inclination is to do butterflies, right? Butterflies, you basically read at 26, right? I mean, we have press conference, but at least right now we're staying at 26. So Marvel concentration is March 15th, right? March 8th, March 15th, mostly March 15th. People, same trade. It's the same trade, same signature, right? You sell 75 put and you finance in long calls, 90, 95. I personally usually I take the opposite approach, but the earnings has been volatile. So I would just do the butterfly, right? You know that if they hit a home run, we will have a concentration between 90 and 95. So I have to look at the prices, implied volatility, and move. So I'm not ready, but my inclination is you buy 90 call, you sell 295, in 90 and 100, you're gonna make money. So you risk very little because it's a butterfly, right? You not relatively little, but this is where you can double, triple your money. So I think butterfly is the way to go, right? And you can do it on both sides, right? Because you can see it's pretty well hedged, right? Actually, 75. There's a lot of April positioning where people are buying 65 and 75 puts. So you also know that it probably will gravitate somewhere between 70, 75, and 80. 10%. Marvel can move 10%. That would be 75. Yeah, so 75 strikes. So same thing. You can do put butterfly 70, 75, 80, and you can do call butterfly 90, 95, 100. Was the idea that it's not going to just stay and do nothing, right? Just like Nvidia or any other. It's going to move, right? Assuming it's not going to say anything negative, it's going to move to the right, and if they say anything negative, it's going to move to the left. It's not going to stay. It's not a two standard deviation. It's not distribution of outcomes. I don't think is going to be this, right? Usually distribution of outcomes of earnings is here, right? But now these outliers have very large probability. So I don't think it's going to be 90%. It stays between this 10% move. I think it's only, maybe 50% or 60%. It's not going to move. But there is like 40% chance, 30% chance it's going to move. So if it's going to move, then butterflies, right? I think that's the way to trade Marvel. LA Lily looks like trying to break out after consolidation. Okay, we'll look at that. Okay, I gotta decide. I have this butterfly on AEO, 11, 10. 2505. Okay. So I can close at least short calls of the butterfly. And if press conference goes well, maybe it will move finally. Okay. Get out of course. Okay. Okay. What else? Qualcomm. All right, Qualcomm, let's go. 172.42. Okay, 0.5% would be what? Let's just would be 80 cents, about 80 cents. So let's do 80, 172.80. 72. I mean, if you can hold it till the end of the day and manage it, you know, I usually don't like to do that, but that's good. 0.5%. Okay, the rest of the position. So we talked about SH. So silver. I mean, it's kind of, I mean, it's a binary event, right? It's either going to break this overhead. So maybe, I mean, well, I did trim at 22, right? So I did trim the 22. It's at 22.30. I got another 1%. I mean, it is facing, I mean, it broke through it once, false breakout. I don't know if it's going to be able to break through this. And it's a little bit overextended, so maybe close. 0.5%. And you know, if it breaks above 22.50, then I can get into the trade, right? So that would be my thought process. So I'm gonna, and then put the remaining position. If it does break out, the next level would be 23 and a half. Okay, so I'll put the remaining shares to close at 20. Okay. So trimmed again 22.30, and I'll be out at 23. And then I can make a decision. You know, if it breaks 23, then I can get into it again, or rotate into gold. Right? Because gold, there is no overhead resistance. Right? The sky is the limit. I mean, it's an exaggeration, but you know, there's no overhead resistance here. It is facing multi-year overhead resistance. So it needs to break above that level, and you know, with CPI, PPI data, it's either going to break out after CPI data or it's going to revert down. So that's silver. Target on out. Let's see. We talked about Verizon. TLT. TLT continues to grind higher. TLT continues to grind higher. So I'm bullish on TLT, assuming CPI data will come in lower than expected. And then ExxonMobil. How's ExxonMobil doing? ExxonMobil is doing well. Okay, so another green candlestick, another weekly momentum. So for now, let's see, is it time to, was it worth? 390. Okay, so we're 50 cents. So we're almost 15% up. So I would close maybe 20% would be what? 410. So close it at 410. So we'll put an order to close at 410. Okay, so I'll put an order to close at 410, ExxonMobil. It continues to move higher. All right, let's see. How's Qualcomm doing? Okay, Qualcomm, I just got filled. All right, that's good. So this is a perfect example of how you would trade aggressive power trader, right? Or you know, active trader. Aggressive power trader, usually sometimes there's more symbols, right? Active traders, there's always 3. Aggressive power trader, more choices or less, right? Because if you already had Qualcomm, then you probably don't want to trade Qualcomm. Or if you had any chip stocks, you probably don't want to add to it. But that would be an example of, wait 10 to 15 minutes, find the worst case scenario, right? I mean, you could always look at support and resistance levels, right? I mean, there was a gap in the morning, so you couldn't get at these prices, but you know that this gap is basically your stop level, right? If it drops below the gap or closes the gap, then, something's wrong. But that would be the how you trade the stock. And 0.5% in short period of time, I think that's somewhere between 0.5% to 1%. You can always hold it, but tomorrow, if you're doing short-term trading, tomorrow it's either going to continue going higher or drop, right, significantly. All right, so I'm out of Qualcomm. We talked about silver. What else do we want to talk about? Oh, that's it. Okay, it's 9:14. Discord guys, thank you for participation. Cherry Blossom, appreciate your time. All right. Ted, any heaven coming UO in April? I mean, Bob trades BITO, right? So let's look at BITO. It's at 30. It's a proxy for risk taking, right? And right now the risk on, right? High beta stocks, biotech, Bitcoin. It's the same theme. There's no difference if you're trading NVIDIA or Bitcoin or, biotech stocks. I mean, this position looks the same. So there is a pretty large positioning of actually not call buying, right? This is, people are not selling calls, buying calls, right? So they're basically saying that it's not going to get above either 32 or the next one is 35. So 32, 35 is your overhead resistance. Pretty large concentration. And this is not call buying, this is actually called selling. So assuming that that's correct, yeah, so it's paused at 32, right? So maybe people are selling calls just in case. If it does break 32, the next level will be 35. If you look at the Bitcoin itself, it's a similar picture, right? It's at all-time high, right? It's facing 2021 high. It didn't break through this, so people are taking profits, selling calls, pausing, and I don't think it's going to move different from the rest of the risk-on asset classes. So assuming inflation data is going to come in better than expected, I think Bitcoin is going to continue to rally. Bob, thank you. Ted, thank you. Any other questions? All right, if there are no other questions, thank you very much. I would look at all your positions. Tomorrow is unemployment data. Usually market is volatile during unemployment data. It could come in as expected, or it could come in much hotter, much colder, so cooler. So I would just look at all your position and make sure that look at the worst case scenario and you're not down more than $250, right? And in terms of key level on QQQ, just to recap. That's a gap, right? It has to break above this gap. So it broke through the overhead resistance and now it closed the gap. What else? So semis are leading, QQQ leading, VIX is down, going into the unemployment data on better than expected. Interest rates continue to drop after ECB decision. So tomorrow probably going to be a volatile day, right? Because it went from 3.8 to 4.3, which is what, 50 basis points divided by 225. So 405. So we're right at the 50% retracement, right? So we're at 50% retracement of 2024 high, 2024 low. It's either back to the 4.3 by Tuesday, by end of next week, or back to or down to 3.8, and the market will move accordingly. All right. Any other questions? All right, guys. Thank you. Have a great day. I will. Oh, we do have on Yellow Tunnel. We do have. We have a closing bell, and then we do have Thursday. 12 p.m. Strategy roundtable. We're going to talk about banks. We're going to talk about silver, gold. Please join me. Usually I get lonely if there's nobody there, but you guys been there always, so I encourage you. 12 o'clock Central. If you already registered, it will say unregister, or you can just click on link here, and then you'll be. Thank you, Bob. Martin, Victor, Bob, Faust, Victor, Kevin. Thank you for participating. Larissa, Lon, Bob, Claude, Ernest, Fanny, Faust, Han, Jim, John, Kevin, Mario, Martin, Patrick, Peter, Raul, Steve, here, Ted, Vamsidar, and Victor. Thank you very much. Intel, thank you, Kevin. I'll look at it. John, thank you. All right, guys. Thank you.